Gotta remember what we're talking about. we're gonna go live in 5, 4, 3, 2. Hello, and welcome to this special three-part episode of Akrinos Access. I'm Eric Matei, joined by Adam Cmejla of Integrated Planning and Wealth Management. We're talking about the world of financial planning for your practice transition. In episode 1, we explored some of the keys to financial planning for your transition prior to the transition. And here in episode 2, Adam is going to share some insights on financial planning during your practice transition. Adam, thank you so much for joining us back here on Akrinos Access.
Eric, thanks for being here. Thanks for having me back. Appreciate it. Always enjoy our conversations. Looking forward to today as well. So let's dive right in.
Likewise. Let's do it. So again, in episode 1, you shared some insights on some of the keys to financial planning for your practice transition prior to transition. Yep. And today we are jumping into the financial planning considerations during the transition. And I know you've got some really incredible pearls to share with us on that. So I'll let you go ahead and take the wheel.
Sure. So this is the metaphor that I was thinking about as we were recording these series. So I have 2 little girls at home. We have an 8-year-old and a 4-year-old. And my wife and I, as we were kind of planning out, so we're recording this mid 2022 or late 2022, I should say, or mid to late, whatever. And we're already planning our 2023 calendar. We're getting through the entire 2023. And we've decided that our girls are at the age where we're going to take our second Disney trip. And so part 1 was basically that part of the conversation, right? Okay, let's make the commitment. This is when we're going to go to Disney. Here's where we're going to stay, like laying the foundation. This is the day of the trip. This conversation here is, all right, it's morning of, we're getting ready. What are the things that we need to do right to ensure as best we can that we have a successful departure and have a successful trip? And so from a practice owner's perspective, the idea of the year in which you've made that decision to sell your practice is such an important one. And before we even talk about that, what I want to talk about first is, let me back up. Before I talk about the first thing, set some expectations. A lot of what I'm going to talk about here today is going to be a little bit more philosophical and contextual. There's not a significant amount of action items that you're going to take, because candidly, a lot of the action items that you're going to take, a lot of that has already been set in stone. A lot of the things that you can take, a lot of the things that you're going to do in the year that you sell your practice, if you're going to do those in the year that you sell your practice, you've decided on doing those because you listened to what we talked about in part 1. All you're doing is simply executing on the plan that you put in place. Today, the one of the biggest things that I've learned in practice ownership or working with clients that are in that transition phase is, this isn't the most eloquent way to say it, but next year is always next year. Hey, Eric, when are you going to sell your practice? Next year.
Oh, yeah.
Next year rolls around. Hey, Eric, when do you think you're going to sell your practice? No, next year. Eric, it's now 2024. When are you going to sell? Next year. Next year is always next year. So one of the things from a business owner's mindset, and again, a lot of today's conversation in the year that you sell your practice, I'm going to focus on the emotional component of selling the practice, because something that I think surprises a lot of practice owners, and the way in which this surprise manifests itself in the actions that they take, is that next year is always next year. What you have to realize when you sell a business is that you will go through some type of grieving process. Grief, by definition, is experiencing some type of loss. Now, we traditionally associate grief with the loss of a loved one, a pet, right? One of the really not good situations, but by definition, grief is just how we cope with the loss of something. And for practice owners, you have identified in part for yourself, you've identified as a husband or a wife or a spouse or a partner, as a dad, as a mom, right? There's all these different identities that we have. And for practice owners, depending on how long you've owned your practice, one of the biggest identities that you've had is as the owner, as the founder, as the CEO, whatever title that you've either bestowed upon yourself or that you've inherited is a big part of who you are. And so don't underestimate the importance of that emotional process that you're going to go through because in the absence and the vacuum of not addressing that and thinking through not what you're retiring from, but what you're going to retire to. So much of the conversation happens on, oh, our first conversation, let's plan on how we retire from our practice. How do we prime it for sale? All of that we're talking about is focusing on what will eventually be past tense. And I feel like a lot of advisors out there talk about that as well. They talk about, how do you retire from your job? How do you retire from being a chemical engineer or an optometrist or a dentist or fill in the blank? But it's important to understand what you're going to retire to. And I'm not talking the financial aspect of this, because candidly, that's the easy part. I'm talking about, what is it that you're going to do? What is your identity going to be? What is going to fill that void of how you thought of yourself and the view that you have when you look at the person in the mirror? What does that look like? Because if you don't give that the time that it's worth, and again, I'm a third generation business owner. I've seen it happen in my own family. I've seen it happen in the practice centers that we've consulted with, that we talk with, and that we work through this process with. Discounting that and not addressing that first domino makes all the other ones harder at best and delayed at worst. And remember what I said in the first session, you will leave your practice at some point. The question is whether is it on your terms or someone else's. Unfortunately, just as numbers would have it, what eventually can happen, this is the Tin Man, right, in the Wizard of Oz. The older we get, the more oil our joints need, and sometimes eventually maybe things don't work as well as we thought they would, or we need them to be. And practice owners can find themselves in a situation of truly still wanting to work, but maybe they can't. And so now you're inserting market forces on your practice. As much as we all love our profession and everybody kind of kumbaya and plays nicely in the profession, if there's a practice for sale and there is a forcing mechanism of truly nobody being able to work in that practice because of some event happening to the owner, there can be blood in the water. And so like the value of that practice, you have to think of this from a risk standpoint as well in the year that you're selling your practice, of being committed to selling in that year, because every year that you put off from there, you're increasing the risk that you won't be able to sell. And essentially what you're doing is you're putting your financial future and the financial independence that you strive to achieve in jeopardy, because you're in a fire sale, the value of that practice can now go down by a significant margin. So sure, I know that's not the, hey, do this, do this, do this, do this, do this in the year that you sell your practice, but I don't want to discount the importance of taking taking the time to invest in yourself and the mindset of who you are as a practice owner, and giving thought. And again, you're a good advisor and a good consultant will help you through that process in the years up to selling your practice, but it doesn't stop, because now rubber meets the road. If we're talking to brokers, if we're talking to listing agents, if we're talking to our CPA about selling, that's when it's like, holy smokes, this is actually real. Like, this is happening. So you have to be ready for those emotions, because if you are, it allows you to have that conviction, clarity, and confidence to proceed with the transaction. And when you do that, when one of those things if you understand those things from a qualitative standpoint, now the quantitative aspects of knowing that you did all the prep that we talked about in the first conversation, with conviction, here's my plan, here's what my practice is worth in the year that I'm going to sell my practice. Here's how that value is in contrast or agrees with what I quote unquote need my practice to be, to ensure that I have enough money on my balance sheet, on my personal net worth, net wealth statement, to live the life that I want post sale. And if you have that clarity, confidence, and conviction, not only on the mindset and the personality of what you're aspiring to after sale, but also the quantitative conviction of knowing this is the number that I need for my practice, all the other dominoes that need to fall become so much easier to execute on. And so I wanted to give that at the time. Now, again, that's like I said, I hope I prefaced this and kind of gave a shot across the bow that a lot of the year in selling your practice is going to be kind of that touchy-feely qualitative things. Some of the quantitative actions that you're going to want to take. Remember in the first episode, I talked about the 3 years is really that timeline. One of the reasons that we say 3 years is that in certain situations, implementing certain types of retirement plans like cash balance plans can allow the practice owner to make a significant contribution into that cash balance plan in the year that they sell their practice, and allow that big tax deduction in the year that they sell your practice to offset the capital gain and tax bill that's generated from the practice sale. So it's not going to wipe it out. It's not a 1-for-1, but it's something. And the year that you sell your practice is going to be one of the biggest tax years that you'll ever have, possibly the biggest. So anything is going to be better than nothing in that situation. But again, you can't do that in the year that you sell your practice, because a cash balance plan has to, IRS and Department of Labor rules as written right now typically say that that plan has to be open approximately 3 years. There's actually no official guidance on it, but it's generally accepted that 3 years, at least 3 years, is that timeline. So that's one of the biggest reasons why we say start the conversation 3 years. So that's one of the big the big levers to consider pulling in the year that you're selling your practice. The other borderline Captain Obvious statements: this is not the year to significantly rebalance your taxable investment portfolio to generate a lot of capital gains. This is not the year to do big Roth conversions on your 401k or your traditional IRAs or your SEP IRAs. This is not the year in which you sell rental property that you have, which might have been significantly depreciated. Now you have gains. The caveat to that, if you're doing 1031 exchanges, yes, that is a way in which you can sell real estate. But again, there are very specific rules around 1031 exchanges. Side note there. But again, be cognizant of the ripple effect of other financial decisions that you're making in the year that you're selling your practice, because once you get to the year that you sell your practice, you've basically made the bed of what you're going to have when you file your tax return in the following year. Second note to that, the very, very, very ballpark rule that we tell practice owners to plan for is about a 25% tax rate on the sale of your practice. It's not always that way. Please don't take that as gospel, right? But if you want a ballpark, a very ballpark number there, if you sell a practice for $1 million, you can plan on about a $250,000 tax bill. Be prepared for that and know that that bill is going to be coming in the following tax season. The details of how do I deal with debt on my balance sheet? What about my bank account? What about collections, asset versus stock sale? All of those are really, really nuanced conversations that your advisors can help guide you through. Hint, the vast majority of practice sales, Eric, I think you would agree with this, happen as asset sales. Very rarely do they ever happen as a stock sale. Yes, I know recredentialing is a big pain in the you-know-what, but it's part of the process and it can be mitigated. So with that, Eric, any thoughts as we kind of wrap up part 2 of the conversation here that I can clarify?
I think, Adam, well, for starters, really, really insightful conversation there. But I think to kind of wrap it all together, what I'm hearing and the key takeaway is having, number one, plan this thing and start the planning 3 years out, because to your point, there may be some vehicles with some favorable tax treatment that you're going to want to be moving money around. Okay. So number one, definitely start 3 years out. I know we touched on that in episode 1. So if you missed episode 1, go back and view it. Right. But here, as it pertains to financial planning in the context of the transition, it sounds to me like the single most important thing is the year of the transition is the year of the transition. Yes. Don't go meddling with other assets and worry about moving all of these different things around. Be sure that the year of the transition is laser focused, and that is the number one goal. Another pearl that you shared that I really think is important to point out is that tax. Be familiar with that ballpark. Again, it's not
your
the gospel,
CPA, your advisors will help you narrow down what the dollar amount's going to be, but just that's a good place to kind of mentally start preparing for what type of check you're going to have to write in April of the following year.
Certainly. And then the third thing you were touching on, which I know was kind of the opener of the conversation, that is the emotional side of things. And it's quite fascinating you bring that up, Adam, because I know your work and our work, we work with doctors at all stages of their career, their practice life cycle. And it's a real thing when making that transition. And relinquishing control. Now, to that front, this is where, and I'm sure you've seen this, I know we've seen this, right? This is where the importance of attracting that associate. Get a good associate in your practice. And really, and this, I suppose, could have maybe been an episode before episode 1. Part of point 1, or maybe even prior to part 1, because the importance here is where we're getting to talking about fit and vision and aligned vision, and then also realizing that perhaps there's no such thing as the perfect fit. I mean, any relationship, whether it's with a spouse, with coworkers, with parents, with children, you're never going to be totally locked and loaded 100% on everything. And I think and perhaps you can speak to that from your perspective, Adam. I know from our standpoint, what we do with Akrinos, it's definitely something helping raise that awareness and helping create that synergy between those individuals. But what have you seen in your experience when that doctor has that associate that's ready to take over, as opposed to that doctor who, hey, I'm ready to sell my practice, I don't know what I'm going to do?
Well, you're certainly limiting your options if you don't have an exit strategy, right? If you have no idea who your buyer is going to be, I guess you could, as I talk about that could play in one of two areas, I will say, or one of two ways. I think it's more consistent and predictable process when you know that the associate that you have has a clear intention of buying the practice. And not to go down this rabbit hole too far, but the biggest mistake that practice owners can do when letting their associate know that they're interested in having them buy their practice is to just say how much the practice is going to cost, how much it's worth, and what that debt payment would be, without letting them know the full financial picture. There's something in business that we call free cash flow, right? Free cash flow is defined as what is the amount of cash flow that the business produces net of operating expenses and debt service in the business. So after everything's been paid, remember, debt service doesn't show up in your profit loss statement. It shows up in your on your statement of cash flows. Give your associate the full picture of what your practice is. Let them know, yes, the value of the practice is this. Yes, the debt that you will have will be this. But guess what? Here's what your free cash flow will be after purchase. We have a wonderful spreadsheet that I'm happy to share with you, Eric. And if you want to use it as a resource, we have a wonderful spreadsheet where potential buyers and sellers can use this tool to say, here's the value of the practice, here's the profit margin, here's the debt that I'd have to take, here's the net income, here's the interest rate, here's a 10-year purchase, a 15-year purchase, if I aggressively pay or I defer, all of these different variables. We've created a spreadsheet that you can use to, not only from a seller's perspective, understand what you're preparing to offer to a buyer, but if you're a buyer, this is a great tool that you can use to say, hey, I want to buy this 1.2 million gross producing practice for a value of X. What can I expect to have net of cash flow? We even built a tax calculator into that. If you assume a certain tax rate, we can show what your free cash flow will be after personal income taxes. So I'm happy to share that resource, and if you want to share it with our with the watchers, with the viewers of this conversation, happy to do that.
Fantastic. That'd be awesome.
Okay.
So Adam, I think, man, really great to kind of pull it all together. Really great stuff we touched on here. Again, episode 2 of financial planning for your practice transition. What's important to be aware of and be prepared for during that year of the transition. So Adam, if anyone's got any questions for you, wants to continue the conversation, how can you be reached?
So 3 different places that you can check us out. Number 1 is just all information on everything that we're doing. IntegratedPWM.com is the firm website. From there, you can also get to our second, the other platform that we have, 2020 Money, which is the podcast that we've produced. We're over 200 episodes. You can find that podcast wherever you get your podcasts. We'll also have links on the website. If you're new to podcasting, we'll have it's easy to find the podcast and start listening on whatever device that you have. And then on that note, we'll also have information on the newly launched 2020 Money community, which is going to be an online community for ODs nationwide, with some tools, some concepts, some resources to help them take better control and plan life on purpose, better control of their money and plan life on purpose in a community setting.
Awesome. Adam Cmejla, Integrated Planning and Wealth Management. Thank you so much for joining us here on Akrinos Access. We've been exploring the world of financial planning for your practice transition. To our viewers, again, this wraps up episode 2. If you missed episode 1, go find it. I think you're going to love it, because we're talking about financial planning leading up to transition. And stay tuned. We're going to have episode 3 here coming just around the bend, where Adam's going to be sharing with us some insights and some wisdom around financial planning post-transition. We have all of us here at Akrinos. Eric Matei signing off.
Thank you, everybody. We'll see you next time.